Hello. Happy Monday. I am Big Cheds. Today is the first day of August, August 1st, 2022. This is lesson 16. Lesson 16 in the 50-part video series based on my best-selling book, Trading Wisdom, 50 Lessons Every Trader Should Know. When the book first came out, there was just a lot of people asking, hey, is there an audio version? I'd love to listen to this book while I'm driving around. I'd love to kind of hear, in your own words, kind of what the book is like. And there was nothing. So what I started to do is on my YouTube channel here at Ched's Trading, I started to record one lesson at a time. This is lesson 16. I'm eventually going to have the whole book, for free for you. You can find these, of course, on my YouTube channel, Ched's Trading. There's a playlist, Trading Wisdom, 50 Lessons Every Trader Should Know. And as you can see here, I'm doing one lesson at a time every, 4 weeks or so, 3, 4, 5 weeks. So we're going to do lesson 16, which is lesson 16, switch time frames wisely. So that should be a lot of fun. Just to remind you, and by the way, this helps too. There's a lot of people who can't buy the book for whatever reason, kind of based on what country they're in. Sometimes there's restrictions with Amazon. You can't get the book. So that's why I've been doing this version for free as well on YouTube. The book is available, as I mentioned, on Amazon. It has great reviews. So I want to say thank you for that. I'm very proud of that fact. It's been really, really well received. Kindle, audiobook, hardcover, and paperback version. And again, the free version on my YouTube at Ched's Trading. And just to remind you, this is my second published book. My first published book, I'm a cancer survivor. I had lymphoma. I was also a caregiver. My mother had cancer. So I wrote about that experience. If you know someone who is fighting cancer right now, or who has a loved one who's fighting cancer, find a way to reach out to me. I'll just email you the book. I'll just send it to you for free, the cancer book. So, definitely, I would say take advantage of that if that's something you think that will help. And just as a reminder, I am a founding analyst at Bitcoin Live. Bitcoin Live is the best-in-class educational platform for crypto. I'm just one member and really a world-class team. I've been doing videos there for 4 years. And twice a week, I do a full market update. Really, no matter what's going on in my life, I stop and do that update. We have a great team, really something I'm just incredibly proud of. So I'll encourage you to check that out. And just again, I'm on Twitter at Big Cheds. So that's, let's get that out of the way. Now you're here. You want to hear the book. So I have the About the Author and the introduction section available here for you. You can just read this kind of at your leisure. I'll just remove the video for just a second and you can hit pause and read that kind of on your own time. I'm not going to do that today. Today we're going to do lesson 16, Trading Wisdom, switch time frames wisely. So let's jump right in. And, I'm doing these in one take now. Earlier on, I would do 2, 3, 4 takes of the videos. But you know what? I'm just going one take. We're having fun. And I really do hope you enjoy this. So lesson 16, Trading Wisdom, switch time frames wisely. As always, we're starting off the chapter with a quote. A great analogy for trading off the 5-minute chart is driving while completely drunk. You might make it home, but eventually this behavior will catch up with you. So a lot of people trade in the 5-minute chart, and I'm going to get into that actually. Let me read my explanation and then I'll kind of riff a little bit. In the book, low time frame trading can be fun because we get to see rapid price movements and we have the chance to nail that absolutely perfect entry, that nut bottom. That being said, the quality of signals you are getting at this low a time frame, 5 minutes, is quite poor. So why is that? Well, the general rule in classical charting is that the longer the time frame, the stronger the signal. Very important. This is true because with a longer time frame, the price action is less sensitive to intraday trading moves, and it's more so a function of the larger trend or the primary trend. So a weekly chart, you could be watching the 15-minute, the 1 hour, 4 hour, and you can have these big volatile moves, and you could think, wow, this is crazy. How can anybody trade this? But then you kind of step out, you zoom out and you look at the weekly chart and you say, okay, I get it. I still see what it's doing. It's still holding its level. It's still kind of riding a moving average or whatever it is. You step back and you say, okay, I still see what the trend is doing. And this minor movement, right, on a lower time frame hasn't changed that. So as I say here, I said, the 5-minute chart, right, it's like driving drunk. Eventually this behavior will catch up to you. So you got to be really careful. Like trading on really low time frames is extremely risky, right? You're going to get chopped out. And it's really designed, the whole price action designed to chop you out. As I say in the book, quote, think about your chart time frames like a scientist using a microscope. You need to move around the magnification until things come into focus. Comfortable with each time frame so you can process each signal in its own context. Right? A scientist, they're moving around the magnification. They're looking at whatever cell culture or whatever they're looking at, maybe in different magnifications to kind of look at different things. You need to be comfortable with multi-time frame analysis. You need to be looking at multiple time frames, trading off one time frame, but understanding what the larger time frames are doing. As I say in the book, so that begs the question, how do we know what time frame to use? It's a great question. If you find that you are having trouble correctly reading signals, your best bet is to move to a higher time frame. Let the 4-hour chart become a 6 or 12-hour, or even switch from daily to weekly if that's your style of trading. Rather than zooming out, you should be inclined to Rather than zooming in, you should be inclined to zoom out and take in the bigger picture. Once you have the primary trend figured out, you can move to lower time frames when the price is at a key support or resistance level, right? So when do I switch time frames? Well, whatever time frame, whatever time frame you're trading on, you want to make sure you understand what the larger time frame is doing, right? So I said that before. When the price is testing a key level, right? When the price is right at that key breakout level or dropped all the way down right to a key support level where it's bounced off of in the past, that's when you switch to lower time frame. You switch to lower time frame right when the price is at a key momentum pivot level. Then you start to look for price structure developing on a 1 hour, on a 4 hour, a head and shoulders, some kind of tweezer top, some kind of an outside bar. You're looking for some type of candle signal, candle body progression, whatever it may be, whatever your technique is. That's when you switch to lower time frame when the price is at a key level. Additionally, you switch time frames after volatility, after a big price drop, right? That's when you switch to lower time frames, right? After a big price drop. Again, we're reading lesson 16, switch time frames wisely. As I say in the book, additionally, one thing to keep in mind as you move around the time frames is that you should be careful not to keep changing them to justify your directional bias. To avoid this mistake, you should be consistent in your approach to trade examination, using a standard time frame to generate your trade ideas. So if you're in a trade and you keep switching the time frame to justify, staying in the position, right? I'm going to keep switching the time frame to justify staying in this long, even though, my stop loss hit on the 1 hour or the 4 hour, I'm going to say, oh, I still have the daily support. Oh, I still have the weekly support. Don't keep changing time. If you find yourself changing the time frame to adjust your bias, you need to immediately exit the trade. So whatever time frame you're deciding to trade on and execute your stop loss on and your profit target on, stick to that time frame. Use the levels on that time frame. If you find yourself moving around the time frame to justify your bias, that should be a big red flag, a big warning sign that goes off, an alarm, and you say, oh, wait a minute. I remember Big Chez talking about this. I should not be doing this. I finish up the chapter and with a quote. You can look at any time frame. Just as a general rule, the longer the time frame, the stronger the signal. So, by the way, I just did a great interview with the legendary trader, Peter Brandt, who's a colleague at Bitcoin Live, and I read his book, which is really good, Diary of a Commodities Trader, Professional Commodity Trader. And he talks about how some of his mistakes, and here's the cancer book, by the way. I'll just send this to you. I'll email you this cancer book if you think it will help you. Peter talks about in his book that he likes to wait for patterns to mature. So he likes to play, a weekly chart that's at least, like 12 weeks old. It's taken some time to develop. He's looking to capture a bigger trend change. So you can do that, and that can be your style, or you can sit there and try to leverage trade every 15-minute, 30-minute hour signal. But that is really difficult. It's high risk. And you're probably going to get chopped out, pay fees, hit your stop loss, and all that. So, it's tempting for people to drop to lower time frames. I think they do that a lot just because they're itching for action and they really want to gamble. They want to trade. Stick with higher time frames. The larger the time frame, the stronger the signal. All right, that is lesson 16. Switch time frames wisely from my book, Trading Wisdom, 50 Lessons Every Trader Should Know. The book is right now, next week, by the way. Next time we'll do lesson 17, Don't Fight the Trend, Ride It. The book is available right now on Amazon, Kindle, audiobook, hardcover, and paperback. The reviews are unbelievable, and I want to say thank you for that. I really appreciate that. There's a free version, and you're watching it right now. It's going to go in this playlist on my YouTube channel, Ched's Trading. Please do consider hitting subscribe. While you're here, watch my tutorials, masterclass webinars, watch my long-form interview series. I just had an unbelievable interview with Peter Brandt. And check out my market updates. A lot of great stuff there on the YouTube channel. As I mentioned before, I'm a founding analyst at Bitcoin Live. I do a twice-a-week full market update. I'm part of an unbelievable team. We churn out a lot of content here, and this team's unbelievable. So you get access to not just my stuff when you sign up, but you get access to everything from the entire team. So that's just something you want to really consider if you're serious about learning how to trade. And just to remind you, my cancer book is available for free. Reach out to me, give me your email address. I will send you the book, and hopefully it will help. That's what I'd like to do. So, just to remind you, I want to say thank you. This is the free version of my book. I enjoy doing these videos. I enjoy getting this book out and the feedback. It's fun for me to read it and kind of expand on the words. I think it adds a lot of context, even if you already have the book. So I enjoy doing these. I hope you are enjoying watching them, and I hope you're doing well. I will talk to you soon. Big Cheds out.